Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the Forex market wrap. We're going to highlight some of the news this week and some of the charts that we took a look at in our week ahead analysis video. So, talking about the news this week, we've had quite a bit of interesting data. At the start of the week, we had Federal Reserve Chairman Powell speaking. He really kind of just reiterated the Federal Reserve stance on the market at the moment. So no real changes to what's going on with the US dollar. That's why the dollar has continued to weaken. Not only that, we've seen CPI data out of the US continue to fall. It came in line with expectations. Anything that was a little bit positive about the US dollar this week was the unemployment claims, as well as the prelim consumer sentiment came in at 64.6. That's quite a high figure, considering, although they were expecting it to come in a little bit higher anyway, and the inflation expectations came down from 4.4% to 4%. So there is still expecting inflation to continue to come in lower. So the dollar's really continued to fall off the back of that. One thing that's happened this week, though, is the Bank of Japan Governor Kuroda spoke this week and really talked about how inflation is affecting the Japanese yen at the moment, and we've seen the Japanese yen strengthen quite significantly over the past few days. So we've really started to see the yen really come back into the market. So, and that's reflected across all currency pairs in terms of the yen. So it's not just the yen against the dollar, for instance, it's the yen against majority of currencies. Now, if we go over to the charts that we talked about this week, we talked about US dollar index, and we talked about the fact that the dollar could continue to push to the downside this week after it retested the 105 spot 50 handle last week. We then traded through the lows of the 103 spot 75 handle, and that was when it really give us the signal to look for that downside pressure to continue. Now, the next stop for the dollar index is the 101 spot 50 handle. Nothing really in the way of that, so I'd be expecting price to come down to this level. If we trade through it, there's actually quite a little bit of room to the downside here. So that would be quite aggressive for sellers in this move. I expect maybe we would get a bounce, maybe perhaps back to the 103 spot 75 from this 101 spot 50 handle, but we'll have to wait and see how price reacts down at this point. Moving on to pound US dollar then. So we talked about if the dollar was going to continue to weaken this week, we could expect pound to continue to rally up to 1 spot 22. And that's what happened this week. We rallied into it initially. We then kind of range bound for the entire week really for pound. So we've kind of been stuck between the 1 spot 22 handle and the 1 spot 21. So although we did kind of rally up, we are still stalling here. So we'll have to see if we get that breakout going into next week, maybe heading up towards that 124 handle. Dollar yen, though, was definitely one to watch this week. Oh, skipped ahead. We talked about the potential for it to find resistance here and for it to trade through the 1 spot 31 handle if the dollar was to weaken. And that's exactly what we got. We got that rejection to very strong bearish closes below these lows now. So I would expect price to head towards the 126 spot 50 handle, and if that low there fails, it kind of goes in line with the level that we just talked about on the dollar index. So if that was to fail, 124 is the next stop for the US dollar yen price. But again, I would imagine maybe some buying would come back into the market at this point, and then maybe some continuation to the downside here. Finally then, gold. So we actually featured gold in a video this week because price came into the 1875 highs, and we talked about whether we should expect price to push down from this level or break and head towards the next level, which was the 1910, and we were expecting a break to the upside. The reason being is because the US dollar index, which gold has closely correlated with ever since sort of April of 2022, wasn't at that level of support yet. So what did we get? Well, we got that breakthrough and price continued to push to the upside of 1910, and you've got to think dollar index still really isn't at that level of support yet. So we could continue to see gold prices trade even higher as the market moves through the rest of January. So that's going to be something to consider. If we were to trade above this 1910 high, it does open the door up to sort of the 1976s, 1980s again for the price of gold. So definitely a bullish gold at the moment. I hope you enjoyed all the video content this week. If you did, please leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.